probability POI, or like I like to call A plus POIs, there's essentially two categories that we're going to look at. When it comes to choosing POIs, we have two categories. The first category is our rules. The second category is our confluences. Right. So there is a very, very big difference between these two when it comes to rules and confluences. Rules are three things. We're going to be discussing three things that have to be there regardless of which market or time frame you are looking at. It's very important to understand that these things must always exist. And the three rules to a POI are quite simply the POI must break something. It has to break either a supply or demand zone, it has to break internal structure, or it has to break structure as a whole. It must break something. So we need to see a break of structure, or a BOS for short. The second thing fair value gaps must leave is an inefficiency or a fair value gap. A fair value gap is absolutely key, and we're going to go over why that is later on in the video. And the third thing we need to have is we need to have price respecting the PD arrays. What do I mean by that? Well, we want to be looking for bullish POIs in the discount, and we want to be looking for bearish POIs in the premium. So this video will dissect a couple of bearish POIs. So we're going to be looking for how a POI can be priced in the premium when we're looking for sales, right? So let's quickly go over our rules. So very simply, if we have price in a downtrend, we're going to see price creating new lows and higher lows, and we're going to have a break of structure like this. So this here represents our structural break to the downside over here. So this is our first rule essentially. So we've seen price break something. The break is simply a structure, and more often than not, it is going to be a structure, right? So we're going to see price break structure just like this, right? So this high over here has successfully broken this low. That's the first thing we look for. Now, the second thing we look for is a fair value gap. And we're going to see price leave a fair value gap in and around this region over here. So this is the blue region over here. The blue region represents a fair value gap. And typically just above the fair value gap, we're going to have our POI, just like this. So the POIs I always mark out in gray. And a POI represents an area where we want to look to sell from in this example, or buy from if we were looking at a bearish example. So a POI over here, just like this, a POI has to have three rules like we've discussed. It must break structure, check. It must leave a fair value gap, check. Now, what's the last thing it does, right? When we see price give a retracement, right, into the POI before reacting and heading lower, we need to understand the POI must be in the premium when we're looking for sales, right? So our structural high is up here and our structural low is down here. So we understand that our premium is above this 50% level. This 50% level represents the equilibrium in price, and it's very simply the midpoint between the swing low and the swing high. So these are three critical rules essentially, not confluences. These are rules you need to determine a successful POI, right? A high probability POI that matches the rules. If you don't have one of these rules, the chances of your POI being successful and being A plus is much slimmer. So it's important to understand that. So with these rules being said, let's go to the chart, and we're going to be dissecting it from a rules-based perspective, but also from confluences. And a lot of the confluences we have boil down to one thing essentially: liquidity. Inducement in particular, right? Inducement is a form of liquidity dropped just before POI.